All right. So today's topic, invisible banking. Are we excited about it?
Absolutely.
Yeah.
Absolutely great. So I see that more and more people are starting to dial in. So let me make a brief introduction. Good afternoon, everyone, and welcome to our online panel in which we'll discuss whether invisible banking is the next revolution in financial services. I'm your host, Remco Wieneberg, Head of Alliances at W.UP, a banking personalization platform. And I'm joined today by an amazing selection of industry experts. But first, I'd like to shortly introduce you to the concept of invisible banking, after which I'll introduce you to the speakers, followed by the panel. So what is invisible banking? Invisible banking, this is banking you don't have to think about, writes American banker executive editor Penny Crossman about the industry outlook going forward. You're offered a loan or a discount at the moment you need it, at the time you're making a purchase. In 5 years, banking will be behind the scene, embedded in everyday activities. Forrester Research, financial institutions will become truly data-driven and powered by automation and AI, giving way to a future of banking that is always on but invisible. The goal of today's discussion, our vision of the future of banking, what role does invisible banking play, and what is the reality for today's banking challenges? And next, I would like to introduce you to our speakers. Christian, please give me a short intro and 2 lines about what you do.
Absolutely, you will get the his pitch. Hi, my name is Christian Dahlgren. I work as the product manager for our PFM products at Tink. I've been working at Tink since last year in April. Previous to that, I've been working as a product manager with an app and web development for big apps in the Nordics. So yeah, that's me living in Stockholm. Really great to be here talking about this subject.
Thanks, Christian. And now Cesar.
Hi, everyone. My name is Cesar Jimenez Richardson. I've been at Strands now for almost 6 years, just over 6 years, heading up the Americas operations. Came over to basically set up the offices in Miami, and then we've now launched into Latin America. So we've had huge growth over here in the last 4 years, and yeah, it's a very interesting time for everything we're going to be discussing today around insight-based digital financial management. That's what we're really focused on.
Thanks, Cesar. I think we are actually we have some industry heavyweights on the PFM field here, so that's pretty cool. Now, Bruno, give me your pitch.
Hi, everyone. I'm Bruno Macedo. I've been doing technology for almost 20 years now. I teach at University of Lisbon, but for the last 3 years, I've been head of delivery implementations over at 5 Degrees. We have a digital core banking platform. So I hope I can bring some of the discussions I have with most of our clients and doubts into this interesting topic that gets to us every day now.
All right, thank you, Bruno. And Tamas, please give me your pitch.
Hi, Remco, thanks. My name is Thomas Brown. I work for W.UP, based here in London. I do sales and business development for the company, but before W.UP, I worked in digital banking pretty much for the last 17, 18 years across, PFM, user experience, digital banking, processing platforms, and so on.
All right, thank you. Okay, so to the next. Yeah. I would like to start first with a little bit of some food for thought. So how would you feel if a bank said to you, we want you to stop thinking about us because we are thinking about you. We are here and have you covered. Bruno, how does that make you feel?
Yeah, good. I know that's a trend. That's something that we've been noticing. And actually, when we wake up in the morning, I think every one of us doesn't want to do banking, right? We don't wake up saying, oh, let me just sit on the computer and do my actions. So I think that's a tendency that we all like, that our banks can actually do it for us as long as we feel comfortable with them and we feel that they actually understand us and they make us feel comfortable on taking the decisions by ourselves. We don't want to do banking as an action. We want banking to be the means to get to the ends that we expect, like you just mentioned, a loan, for example, for a mortgage. I don't know if you want me to explain more, but we can go on about this. It's really one of the tendencies that I feel that most of the customers now are asking for, with some interesting details around it, like digitalization, where we want to be treated online and offline the same way, but where the bank has to be there presently. So I think totally think this is something that is going to continue to happen more and more these days, especially based on the amount of data that banks have about us. And again, we have been pampered by the big techs like Amazon and the others, like the big GAFAs. So we expect the same from banks as we expected from GAFAs to do for us.
Interesting. Yeah, no, I totally agree. But I would like to ask Christine, how do you see that from Tink's point of view? Do you think customers want the bank to be invisible?
I think invisible is kind of a dangerous word. I think that one thing that is great with open banking is that you have SCA that you can actually authenticate to give third parties access to your data, and then you could like use the financial tools that are out there to actually help you become better. And then of course we're moving more towards invisible banking. But just to take an example, like I would love to go in a car that is that has an autopilot, but I don't want to go to sleep in the car. I still want to look at the road or see where I'm heading and actually entering my address. And then of course I want to have guidance and help in that way, and making sure that I get suggestions and to guide me in the right directions. But I don't want it to be completely invisible, because I think that's dangerous.
Cesar, what do you think about this from Stan's point of view? Do you see the same trends in America?
Yes, absolutely. I think it's everywhere. I think this is essentially where big tech, collides with the traditional banking, and I'd even say, digital banking version 1.0, right? So the idea now of how can you move away from a transactional-based digital banking experience, right? Or when I say digital, when we're talking here, I'm thinking of thinking of it from a digital perspective. That idea of going somewhere to see what the status of your account is and then coming back. That process has to end, essentially because technology companies have understood how to build experiences from the customer backwards. And banks are in the process of doing the same thing. And in doing so, the bank, what we think of as finance today, disappears, because it's not something you do, it's something that embeds itself in your life. I think, to me, that concept started to become fashionable 2, 3, 4 years ago when you started hearing the Uberification of things. So this is the Uber of something. And that was because, and I can still remember the first time I used it, that experience of first downloading that app, the tool knowing where you are, you come out of the car and it processes the card without having to take your wallet out. All those things that took place were magical. And I think what we're talking about here is doing exactly the same, building the same experience so that banks can have that same relationship with their customers. And that's the angle I see it from.
That's very interesting.
Yeah, sir. I think like the Uber example is such a good part, because at least like you need to enter where you want to head, right? Exactly the same thing with financial services. You need to, like, we with our products will never know what you want. You need to at least let them know, like, I want to be a millionaire when I'm 45, or I want to buy a summer house, or I want to achieve something with my banking experience. And exactly with the same thing with the Uber, you put in the address where you wanted to be driven, and then you also enter the address where you want to be picked up, and then the rest was taken care of it. So I think like that is something that you need to have in mind.
If I can be a bit of a devil's advocate here and say that is all true, of course, and I agree with most of it. However, if you put yourself in the shoes of the everyday Joe out on the street, you could argue that this probably requires a different level of trust towards banks and organizations, because it's not really your Uber payment which you blindly trust it's going to go smooth and then the guy is going to get paid at the end of the trip. It's really your finances, your hopes and dreams and plans and goals. And if you just leave that to the bank to invisibly, magically come back to me when I need to do something, that's a big level of trust towards the banks. And I'm not sure, most people probably trust the banks, at least according to surveys, that they're keeping safe of their money, right? So that's pretty much given. That's why banks are banks. But whether I can trust my bank with my dreams and aspirations, what I want to achieve, and if that bank can invisibly help me along the way, that's a different ballgame. And I'm just saying, as a devil's advocate, as I said, there's a lot of work which needs to be done in terms of education, how these things work, to explain to everyone that this is, you can trust us with more than just the money.
Yeah, I totally agree. It's complex. Yeah, and the bigger the amount and the bigger the knowledge, the financial knowledge of the user, the customer, the harder it gets to trust the bank fully in the whole operation.
It is an education.
True, but as Remco is just actually putting out the slide, it pops me up something that I hope, Remco, we also touch in this meeting is the other way around, because the more invisible the banking becomes, the less brand aware we become of the bank. The more the bank does automatically, the less I actually get in touch with some human part of the bank, the less connected I get to actually to that bank. And I hope we can get to it further down the discussion.
Oh, yes, we actually have two questions. First, I want to say, Tamas, totally right. Do we trust the bank enough to actually get to this level of invisible banking, which is a really good question. The second part is human touch, which is also included. So this is actually, I think we've answered the first question already, so we can go to the next. I would actually like to talk a little bit about could this be the invisible future that customers actually want? Do you guys believe that consumers are ready to embrace invisible banking, and from what level to a higher level?
Yeah, if I can start, maybe
I can tell. Go ahead.
Sorry, it's contrary to what I said. I do believe that yes, this is the future, right? So I think if we, and not even just in banking, but in general across other industries as well, and maybe taking an analogy in hospitality, I think Ritz-Carlton is always perceived as one of the highest customer service hotels in the world. So they really got that perfect, right? So if you go to Ritz-Carlton, you're just gonna get the greatest customer service ever. And if you imagine what hotels and hospitality does, is that they know what newspaper you're reading, and that's in front of your door every morning. In most restaurants, in most bars, you know what your favorite drink is. You know what foods you like. You know how you live your day when you're in the hotel, and they're trying to serve you almost invisibly, anticipating your needs. And of course, this is an art form as well in a hotel. And if customers like that when they go on holiday, when they stay in a hotel, why wouldn't they like the same thing from a bank, that they don't have to think about daily banking every single day? The bank will look after them. They will anticipate their needs. If they need to put money aside for a holiday, then let the bank figure out what I need to do to actually be able to go comfortably on a holiday in August and not have to worry about money. I think people will like that. That's the future.
What do you think about that, Bruno?
I've been researching about it and lately, because of some of the pressures, the good pressures from our clients and colleagues on how to use the data, how to make value of that data for the bank and the customer side. And actually, I do believe I do agree with Tom and Thomas. And the thing is, customers want to be delighted. And what does that mean? It's that experience where if I walk in a branch, I want to feel that the branch is just part of my work life or daily life. And branches are changing into something completely different. If you see Virgin Money, for example, they just created a branch where you can actually play bowling and have kids play with the draws. In Spain, there's banks with where you can just play with PlayStation while you're doing your banking activities. And that's just a response to banks trying to adapt to that experience where I actually feel comfortable with the advice and the banking as part of my daily life, but not as something that I have to stop and actually think too much about it. And it just oscillates me. But that requires a lot. That requires that banks will have to have the infrastructure to respond to that. That's super hard. And the mentality, and also customers, as we have been pointing out, have to be also ready to trust the bank to do those activities at a certain level, which will require kind of a journey, and that journey has to be repeated and repeated over time so that we actually trust our bank. A lot of speakers online actually mentioned the example of Intel Inside. Intel has been putting the Intel chips inside computers, so that we don't forget that there's an Intel chip inside, but we never think about it when we're actually using the computer and playing a game or doing our work. But so they actually have to point out, but we're happy and delighted to know that there's a nice service behind it. And I think banks have to go that way.
How do you see that from Tink's point of view?
Yeah, absolutely. I think that like what the banks that we're working on with today and the interviews we've done with their customers, like at the end of the day, customers want control. It's not some doesn't have the time or the interest to learn. And of course, we want to cater them in the best possible way, giving them the right type of insights at the right time to make sure that they get reminded to pay their bills and just transfer money to their savings account and so on. But at the end of the day, what they want is a great user experience and with transparency, and to make sure that each and every decision that they make is simple. And then you want to make like the tough decisions or the things that you don't need to think about easy to do. So I think like that is really what we're trying to do together with our customers to really make sure that we take care of the simple things, and then you need to think about where you want to go.
Yeah, exactly. But I want to touch base a little bit on the previous point where we mentioned Uber. So do you think that customers will be very comfortable with invisible banking if they get the same experience as, let's say, what Uber delivers, right? Because Uber was not necessarily about fixing the taxi issue. Uber was about moving the friction from ordering a taxi and making sure that the customers completely doesn't have to think about the experience. You get taken from point A to point B. How do we see this in the banking space right now? Because in my opinion, I haven't seen any of the traditional banks employ such technology yet. How do you see that, Cesar?
Yeah, and I mean, to me, one of the things, it's not so much more that the bank offers the technology, but the bank enables specialists out there like your Ubers to be able to have access to the data they require to be able to create these new experiences, right? Which to me is, in a lot of cases, what I think of it is enabling banks to monetize data. So how can you generate new revenue from an asset that the bank has, which they've never really generated revenue from, right? Why? Because the bank's business model has been based on, you know, taking deposits for one and then getting a certain rate and then getting loans out and staying with the spread. Now, through disintermediation, those spreads have become smaller and smaller and smaller and smaller, and then you suddenly think, well, what the bank can really do is enrich that data that they have and then be able to expose that data to build all these new experiences. But will the bank be building those experiences, or will they be done by third parties? I think through the API economy, you're going to be having third parties doing that. But the bank is going to have the ability to be able to generate revenue and value to the customers by exposing enriched data. And most importantly, I think the central value proposition for the bank is people will always align, or at least today still align, bank with security. And to me, security is that key value that the bank gives me. I mean, you sit down and see everything that's taken place with all the social media companies and Cambridge Analytica and the way that that data was misused by third-party technology companies. I'm actually halfway through watching it. There's a new movie that's come out on Netflix, at least in the US, called The Social Dilemma, which is very interesting too, and starts breaking down the level of analysis that takes place on your data without you even realizing it, and actually getting into your subconscious to be able to lead you to make decisions. What happens is that when you start watching this, you start thinking, is that data being used to my benefit or not? And then you start thinking, how can a bank position itself to say, let me take care of the value of your data in the same way that I've taken care of the value of your money and your currency for the last 200, 300, 400 years. And when you start seeing it that way, you then start realizing that the bank is a vault for your data, for the insights generated from your data, and they should maintain your interests in mind, right? They'll be helping to protect them. They'll be helping you to monetize from them, right? So I might be able to generate a flow of data that's of high value, and the bank might say, well, if you expose that data to these partners, you can generate 2 or 3% of X value, however you want to value your data. So I see it as a huge pivot change. I mean, this is like reinventing it, but that's where I see banks being able to step up and compete with big techs. And the technology and the ability to be able to do that is where, I guess, we sit down and have these conversations with banks. It's saying to be able to rapidly innovate so that you can keep up with the big techs and the fintechs, you need the platform to do this. And then you need to be able to create the business models so as to understand that you can generate new revenue streams from the monetization of securing the data for the customer. So I realize I've gone off on a few tangents there, but that's, to me, that's the central part, and that's where it comes out.
But I think it's also then about transparency, right? Because that's what you're pointing out. If the bank is very transparent about what they will do with your data, if it's in the benefit of the customer, then there's a huge win-win on both sides.
Exactly, and that's to me also where GDPR in Europe is a great framework to work on and work from, right? And understand open banking is good, but as long as I know what's happening to it. You see how traditional data aggregators have worked originally in North America and in other regions, but you don't really know what's being aggregated, right? And you really don't know how third parties are reselling that repackaged data. All of that has to disappear, and a bank shouldn't want to be associated with that because it's in their interest to keep the customer, to basically say, my central value proposition is your data is going to be taken care of, and we're going to help you use this. And the value of that data, we know now, it's tremendous value, right? I mean, to me, Cambridge Analytica was the moment that the mass market realized how valuable it was because it was able to swing elections, right? I mean, you can't get anything that's more powerful than that.
Yeah, I think, Cesar, I just wanted to I've also seen the movie, The Social Dilemma. It's a great movie, and I think one element I would add to your thoughts is that I think not everyone will want to see the same level of invisibility, right, in terms of banking. So there will be some people who would say that I'm quite comfortable if you take it away in the background, use your magic, and just let me know when I need to pay attention to something. But I think some people will not be like that. And if the banks and the organization can use the data smartly in a way that they also figure out this sort of sensibility about how sensitive you are to just let it go freely in the bank and not keep attention to that, I think that usage of data is also very important. If we at W.UP, we call it personalization, right? So you want to personalize how much you want to engage with certain customers. And like I said, not everyone will want the same level of engagement. Someone will be quite happy to just let it happen as the bank would see it fit. So I think, you know, using data, of course, there's tremendous value in it, but using data to shape the style or the nature of the conversation with some customers is also very, very important. Same way as social networking companies or in the movie Social Dilemma, they describe this, that they will know when you are more receptive to look at the message, what minute you have to send out the push message from Pinterest to look at that, right? So the same way the banks will also have to get a feel for, you know, how do I approach this customer versus the other one? What is the engagement level? How loyal that customer is? How trustful that customer is? And according to that, I can shape my communication strategy. I can shape how I want to engage with that customer.
So I think it also greatly depends, Thomas, on, let's say, some customers will be very happy with having invisible banking, let's say, when it comes to daily banking, daily budgeting and spending. But Bruno, as you mentioned earlier, there's also this lack of, or this need, I would say, for human connection, right? I mean, if I would apply for a mortgage, I would be very happy to do this in person with somebody sitting in front of me instead of happening it somehow invisibly or somehow completely online.
Yeah, exactly.
Absolutely. What we see is that
Go
ahead, Thomas. I just want to mention that what we see that the branches itself, it's not going to disappear. It will change completely, but advisory is still needed, especially at higher financial education levels, where you might not trust an algorithm or a computer to make the decisions for you because you feel you still have that animal spirit when investing and you want to talk with somebody with experience. And also in a way, it would be nice to also get your point of view on this, is you saw during the pandemic how people actually went for cryptocurrencies and investments and the Robinhood effect, where people actually believe that there are systems out there that can make decisions for them and they actually trust it. So it's a very interesting approach where humans, we're complex, but you know that people want that combination of physical, emotional touch, where you actually trust another human to actually be at their arm's reach for you to talk to, and maybe say something a little bit more private. And on the other hand, for some other activities is perfectly, we see the tendency that people want just the bank to take decisions if it's easy, rational, forecastable, and they can take it out of what I've been configuring myself to do. If I want to apply for my kids' school in university in a couple of years and I want to save for that, I don't want the bank to ask me. I just want to configure something, make sure you save for this amount and start paying it. Done.
Yeah,
So
exactly.
you're absolutely right, Remco.
Yeah, and I think the data is there to discover these personality traits, definitely, right? So the banks would need to be a lot smarter to figure this out from data, how they interact with customers. I mean, I personally, because we all work with bankers, we're selling to banks here, speak to bankers most of our time during the day. The last thing I want to do is to go to a branch and speak to another banker when I'm not working. So someone needs to figure this out and interact with me in a way that they know this about me.
Yeah, no, absolutely. I think that we all agree that basically invisible banking could be extremely beneficial to the consumers, but it ranges from complexity of products, and we definitely still need a human touch. I would like to ask the next question, which is a little bit interesting because we've been talking mostly about the consumer side of the point. But the well-known fintech journalist Chris Skinner states that invisible banking commoditizes banks, which is not good for them. Do you agree? Do you think that invisible banking would not be beneficial to the banks?
Like, I can just make my 2 cents. Like, I think it's all about seeing the opportunity of open banking, and also the opportunity about invisible banking, because banks have the responsibility to hold funds, right? But also to facilitate and distribute capital. So I think like they would be there in the background powering the generation of financial tools, and then like utilizing the opportunities with open banking. Like, are you going to offer the best financial products? Also make sure to open or offer really good user experience for users. Now with open banking, it's up for grabs. Those that are willing to offer the best customer experience and the best financial products, those will take the lead in this game, right? So I think that banks, of course, their margins will probably be lower, but there's plenty of opportunities to create profits in this world of invisible banking. That's at least my 2 cents.
Yeah, if I may add something, and Remco, sorry, Thomas.
Go on, Bruno.
If I may add something, it's what I said in the beginning. It's very interesting because the more invisible your bank becomes, the more harder it gets for your brand awareness to stick. So you really, as Christian said, you really have to make a really good job so that the word of mouth or the branding when you expose an app with a certain functionality sticks there. It's a good sign if you're successful, but you have to be careful because from the banking side, you might lose actually the control from your customer, control in terms of being connected with and the customer actually knowing that the bank is doing some effort, a bigger or smaller effort. If it's invisible, it's invisible. If I apply for the whole journey of getting a house, and in the 6 or 8 months that I search for a house, get a loan, check for the prices, get for services, if that's all invisible and actually the loan just pops in there and it's easy to get that loan, I will feel very happy with my bank. But at the same time, I'll probably, as a human, minimize a little bit the effort that the bank actually did behind it, and there has to be a great job over marketing, over branding. As I mentioned, online, everyone mentions Intel about it. Intel keeps saying there's an Intel processor inside. So we have to kind of have the same approach from the banking and fintech industry to make sure that the more invisible it gets, the more the customer actually knows that you're there for somehow.
Yeah, because I think that Apple does a great job on that, for example. A lot of things with Apple run in the background, but you don't lose touch points with them.
Yeah, that's
Absolutely.
my point of sorry.
Yeah, go ahead, Thomas.
That's my point of view as well. Slightly, you know, I agree with Chris on most things, but maybe not on this one if he says this is not good for them, because I think invisibility doesn't actually mean that the experience disappears with the banks, right? So you can still create experiences which is good for the customer, but create it in a way that it's meaningful, right? It is relevant and important, and you do that experience when they need to go and engage with the bank. But the rest of the stuff, the boring stuff, disappears and it's invisible. So I think, you know, that is actually a competitive edge. If you can get this right, if your engagement level is perfect and is fine-tuned to every single customer, to every single financial event, that's a competitive edge rather than commoditizing banks. That's my view on invisibility. So it actually doesn't mean it's completely invisible. It's just very fine-tuned, very nuanced experiences at the right time with the right customer.
No, absolutely, and I think you're gonna see the word of mouth working more and more importantly there, and the social media reactions on that. We saw it with the cryptocurrencies, we saw it with the neobanks, and this is going to start to happen everywhere, and people are going to start to mention banks and banking services as with higher levels of, I would imagine, knowledge and experience. People are going to start to mention that a certain app, a certain bank, a certain service is really they had a great experience with it. It had a great success. They're going to do it, I imagine, more openly that they actually do these days with the traditional, let's call it traditional banking so far.
Well, I actually believe that the traditional banks have become quite comfortable due to the COVID-19 crisis. So what I see is that consumers are actually flying back to the traditional banks. So this actually opens up unique opportunity for the traditional banks to catch up with the neobanks in terms of user experience. But I would like to ask you, Cesar, what do you think? Do you agree with Chris Skinner? Do you think invisible banking is bad for the banks, or is it just depends on how you take it?
My thing with it, I think, is that it's bad for the banks when you think of the market share of all the banks in the world as they exist today. Because what is, to me, going to happen is that the banks that know how to innovate the quickest and innovate the fastest will know how to take advantage of this building the right partnerships and the right platforms and the right technology to be able to enable this to happen, which is something you can't stop, right? I mean, it's just like a natural inertia that's taking place, so that the convenience of financial services through any channel takes place. The banks that make the steps the fastest and with the best partnerships will be able to realize the benefits from that, and the ones that don't will be the ones that will end up basically staying as laggards, and then fall into the next rounds of mergers and acquisitions that takes place when there's the next bump on the road, right? So what I go back to the same thing that I mentioned earlier before that, to be able to really remain relevant with your final customer, you need to really understand as a bank how to explain to them, what is it, where am I going to deliver value to you? I'm going to be able to deliver to you direct to consumer a digital experience that you will like, which I will give you branded by me. And it's going to be, like I said, it may be aimed at someone who's a boomer and someone who's a millennial, and they want to have very different experiences. But I also need to understand that potentially my customer wants to bank with a new Google experience that's going to be generated by them, and I want to plug it into them, right? And now we've gone into the partnership with Citi, and they've gone into partnership with another 5 or 6 different banks in the US, and they're sort of doing these things in beta. But I think that as banks start realizing that that is just the natural direction which it's going, is whether you, as a financial institution, want to partner with that or you want to not. And I think you want to be able to keep your options wide. You want to be able to do both, and you want to be able to invest in owning your own digital banking experience and own the eyeballs on your own platform. But then you also need to understand, how can I generate a revenue stream and a partnership strategy so that I can also remain relevant on this very different business model. I think one of the ideas I discussed with you on the call we had the other day was an article I read recently on how the browser MetaMask, which is essentially one of the leading crypto wallets, is now embedding itself inside the browser, the Chrome browser window, so that you can essentially start seeing your browser both on your mobile and on your standard PC, Mac, whatever, as the portal to making payments happen with any type of web-based portal that you're looking for. So I thought that was amazing, right? When I was looking at that, I was thinking, I will start to be able to have my wallet be my browser. And today, the browser, for anything else that isn't a native application, is essentially running on that browser. And I already have my wallet embedded inside that browser. And the first stage there is they're opening a series of crypto options to pay through crypto, but why not through PSD2 do a connection with a PSP with your bank and then be able to pay through there too? And
yeah, no, it's a brilliant example. Yeah.
All that frictionless behavior that starts taking place, to me, the financial institution has got to say, I want to be able to deliver a solution so that I can compete in that space. And I need to know what is it I'm going to do. I mean, I'm getting to payments, which is something I have less experience in, but I certainly know that, going back to what Tamas was saying before, it's saying, how can I use my data to be able to predict behaviors so that I can segment my customer base and try and increase the percentage that I can convert my customers by. And by mean convert means position a solution, a service, a product, something that I think is going to be relevant to them. And then instead of having a conversion rate of whatever, 20, 30%, try and increase it to 60% by leveraging my data. And in that conversion, what you're essentially doing is that you are continuing to remain relevant with that customer. And in many cases, you're actually predicting, before it's happened, you're predicting what's going to take place with them. Now,
but isn't that essentially like removing friction from the journey and staying relevant to your customers? Perhaps that's the essence of invisible banking: predicting behavior with the right data, staying relevant, and removing friction. But I would like to ask you guys one question, because we've been talking a lot about consumers and about banks. Now I would like to talk about someone else, and that is us. So how can vendors like us truly deliver on all of these promises? Because I'm sitting here in a room with Tink, with Strands, with W.UP, with Bruno, and we've all worked, or we're working currently with companies who basically promise that we can deliver this kind of next generation PFM personalization solutions towards banks. But can we actually deliver? Bruno, I would like to have your take on that.
Thanks. I like that you put me in the spotlight for the hard question. It's not easy. It's definitely not easy. It's a learning journey for banks, and for us vendors, I would say it's even an extra hurdle, because we have to convince banks that we know what's going on out there. We can actually predict and help banks to create that value. And most of the times, if not all of the times, it implies a big effort from banks to change mentality, to change their enterprise architecture, something to adapt to these new worlds and to be convinced by us. So when we make that promise, not only from the digital part and the technology part, which is most probably one of the easiest ones for us to start with, we actually have to, as vendors, twist it around and go from the user journey, user experience, to the actual bank experience, and try to make that hard positioning of explaining to them in their own vision how are we going to bring that extra value. It doesn't help if I go to a bank and just say, hey, here's a cloud platform with super cloud technology and all the data that we can calculate it. If the bank can't understand what it has to do and what is actually the effort inside and what's going to be the outcome, and especially banks are of course very number related and finance related institutions that want to see forecasts. How much is this going to bring me? How is this going to shape my future? How is it going to change? And we're mostly bringing new stuff, so it's actually hard for us actually to bring those numbers and those researches. We have to every day come into these panels, every day talk to experts like you guys and try to capture as much as we can, so we can explain to them in a way or show them in info charts or something. This is the vision, this is the value that you get, but you can't wait for 5 years studies to show how important cloud technology is, for example. You can't wait to show how important cryptocurrency in a browser is, for example. We don't have that luxury. So as vendors, it's next to hurdle. And with this, I'll stop because I've gone a little bit too much. But I think that's actually part of our energy. It's where we actually strive, is to bring those exciting things that we find exciting online, talking with you guys and figuring out and discovering, into something that we actually present at the table to banks. And actually, that's one of the marvelous things in being in a fintech, is that when we actually make a project, we actually feel that experience that we said, damn, I was really right. I felt it. I got the knowledge with my colleagues and my partners, and this actually really works.
Gotcha. Christy, what's your take?
Yeah, I think, like, first of all, where Tink comes from is that we started doing aggregation back in 2013. So like we have started to analyze data long before PSD2. So we can help banks understand third-party data, because we can bring our machine learning algorithms to categorize transactions, and we can create insights based on third-party data combined with their internal data, because they have had access to their internal data for quite some while. Even though they've been more focused on AML and risk and so forth, they've been looking at the data for quite some while. But we as vendors can really make sense out of the PSD2 data and try to make sure that we can combine that with their first-party data and create important insights to really create that personal experience.
Okay.
Yeah, I think yeah, I could add to that what Christians you said, that obviously, yeah, this technology piece, which is the enrichment part, the categorization of data, further enriching and augmenting it maybe with other type of data as well, whether it's digital activity data from GPS locations and so on. So these are all, as Caesar said as well, very valuable, useful insights, which I think we as all companies here can help the financial institutions to avail these things for them. But I think one more layer sometimes we see, and I'm not sure if you resonate with this, but with a lot of banks, it's a question, then so what? What do I do with this? What is personalization? Can you give me precise requirements which I need to get approval for? How do I monetize this? What is financial well-being? Can you actually describe me in a functionality which I need to send out as RFPs, what it is? So a lot of banks struggle with translating this concept into projects. And of course, you know, we know the culture in some of these financial organizations, that they work with projects and programs and deliverables. And sometimes that is the hard thing, to align all these initiatives towards a global, holistic view of how you need to engage with your customers, how you can be more personalized, or how the engagement can be lifted up to another level. I think that is very hard to do, because it's not only technology, it not only depends on us as technology vendors, it depends on the culture, it depends on how receptive the bank is, how well they work with fintechs, if we're talking about the large bank. And if I can do a commercial here, in the UK, the fintech pledge was signed recently by a lot of large banks. So they're trying to establish a process how to work with fintechs, to provide clear guidance on to technology firms on the onboarding process, how they want to work with them, what is the timeline, what is the named contact you can always call up and explain these issues to them. So I think if a bank has this view that I can engage with my fintechs in a way that I can receive all this information, that is already a big plus. There's a big plus.
Yeah, no, there are obviously many friction points on the banks working with fintechs, but I think that one of the interesting points, and a joke I sometimes like to use also towards the vendors, and I'm curious to your reaction. I mean, humanity can get satellites into space, but we can't get our categorization of transactions 100% correct. So I want to ask a question that basically came from the audience, because I think it kind of fits into this discussion right now. Is invisible banking, what if you don't get the personalization 100% right? Do you need to be perfect in building value UX to avoid commoditization? What do you think? Does the personalization need to be 100% to be relevant?
I think it depends on what you get wrong, to be completely honest. If you say that if you start doing kind of big mistakes there, if you start categorization Netflix as restaurant and saying that your credit card bill is something else, I start like, you need to have an underlying foundation, so you have a great way to understand the data before, or else if you don't have representative data, you cannot build the other things on top. So like first of all, you need a layer to make sure that you say. But if you then of course you have different minds to like if you went to a hotel and you had a dinner and then it was an expensive dinner and we categorized that as a hotel, I think you're a bit more open to that was a fault compared to categorizing Netflix as restaurants. I think it's a lot about what you do wrong. But of course, you need to start having representative data, or else the advice on top will be wrong.
But do we? Yeah.
No, I was going to say I agree. For example, when we speak about hotels, for example, I had I had an experience with probably most of you had with hotels trying to modernize and create a more personal experience, where I talked to a chatbot to try to get a room for a group of people, and after a couple of questions with the chatbot, the result was, please send us an email. So the whole process ended up me spending 15 minutes for nothing. And I think what Christian is saying is I totally agree, in the sense that personalization doesn't have to be 100%, but we have to be careful when we actually use that categorization and we use that personalization for an experience. I always envy the Instagrams and the TikToks of this world for the interactivity that they get with their customers and how they can shape things slowly into kind of that personalization level that I don't think financial institutions have the luxury to get. My bank is not going to ask me every month do you agree with this or do you agree with that with my financial transactions or categorizations. I might get upset, like, okay, this is important, this is my money, as opposed to Instagram or Facebook or any other that I don't mind if they get me 1 or 2 wrong. Maybe I get upset if I get 15, 20, but there's a luxury that we don't have. So it's really hard and to get to that 100%.
It is hard, and I'm sure most of the audience and you guys as well heard the famous story of Target in the US, and based on a girl's shopping habit, sending pregnancy-related brochures and flyers to their homes, and then the father picked it up because it was a relatively young girl, and it was a big family discussion after that. But again, I think it will never be 100% perfect. I think banks just have to face this fact. And I think what's actually more important is that the fact that this is never going to be 100% correct should not actually discourage the usage of these technologies, right? And I think this is what the contemplation I can see in a lot of banks, that, well, we know this is great, but what if we don't get it right? Imagine the PR losses or the reputational losses we get if this goes to the press. What if we get a complaint? What if a customer is going to sue us because we did an incorrect communication, and so on and so on? So compliance, legal, all sort of departments in the banks are probably going to have a hard time getting their heads around the fact that this is not 100%. It's not easy. I don't think there's a magic wand, but certainly what I agree with is that this should not discourage the usage of technology. Technology will improve. Eventually, it will be nearly perfect. Like social media companies perfected this to almost you can swing elections by using this.
Yeah, no,
absolutely. I think banks will have to become some kind of AI advisor in a way, most of their actions, as you're mentioning, and I have to trust it, and it will get there somewhere. We can't afford to spend as much time as our fathers or grandfathers used to spend at a bank, and especially if you're in the commercial world, you really need that time. That it might be the difference between a great project and a great opportunity, the hour or the day that you spend at a bank to try to get a decision versus something that can actually auxiliate you with the data and the personalization that you need with advisory, for example.
But then I would like to also touch base a little bit, because I think this also, again, what we talked about earlier, really reflects to the trust level, right? So do you think that there is a gap between consumer expectations and actual customer experience in banking? Do you think that there's enough trust to reach this invisible banking level?
I think there is, yeah. Some customers may not know it, that there is a gap, but there certainly is, right? So I think we industry players know that if you can design the perfect banking experience to someone, and then you ask that someone to go through that experience, we'll be like, wow, I didn't know this can happen, right? So I think certainly the gap is there, but maybe not that apparent or visible to most people who are not in the industry. And I think, like I said, the trust level, certainly, but the question is whether you as a bank can identify that trust level with the customer. Certainly, if someone is skeptical or is less trustworthy or less trustful towards the banks, then it's a different level of conversation or engagement the bank would need to have. I used to live myself in Saudi Arabia about 20 years ago, and I saw people walking into the branch demanding to see the money they just deposited on the account, right? They literally wanted to see where is the money. It was that level of trust. Now you cannot start, machine learning based, trigger event based communication with someone who doesn't trust whether the money is in the bank. So as a bank, you need to feel for this, of course, using technology.
Yeah, I also think like the gap differs per country and per generation. Like I think that's in some countries, I think banks has managed to come quite far when it comes to customer expectations, and in some countries they're quite behind. I think there's a reason why like Tink was founded back in 2013 because the banks didn't have a great personalized user experience, and that was what we were trying to do. And I think that since that time has happened a lot. But I think like when it comes to trust, like we trust our banks with our money and our data in a sense. And I don't know, Bruno, if it was you that mentioned that now with COVID, actually more people has gone back to their the retail banks that they had before and start using the neobanks less. So I think that is at least a proof point of that trust.
Yeah, so I totally agree that there's a gap, and then we see it, as you guys mentioned, from country to country to generation to generation. I'm Portuguese. I'm currently in Portugal, and it's interesting that the technology and communication infrastructure in Portugal is amazing. The fiber optic connection, the speed, and we have good examples of advanced banking apps, and the majority of let's say the majority of consumers doesn't have the same level of advanced digital banking as in the Netherlands, for example, and they could, because the technology is there and there are apps out there. So I honestly believe it's one of the interesting things about let's say the human factor in every business, is that even in the process of creating that customer experience, in the process of creating that solution, maybe not for the younger fintechs, but sometimes I'm talking to developers and I'm talking to product owners that come from a generation that is not a generation, a millennial generation or a boomer generation. So it's even hard to develop a software sometimes with the mindset of the actual target generation, and I think it's an interesting challenge. There's trust, but still, from the customer experience perspective, some things are completely turn-offs. If I start a whole loan process and in the middle of the process, and I got that experience, somebody asks me for my payslip or somebody asks me for my address when I have my salary being domiciliated in that bank, I just get, okay, come on. What is this? You know me better than I know myself. So totally agree. And sometimes not only from the bank side and the product side, also from the consumer side, with, as Christian mentioned, during COVID-19, and we've been talking about this, Remco, a couple of times. You see that people get afraid, and when they get afraid, they tend to mistrust machines and automated decisions, and they tend to trust more the harm's reach person, bank manager, bank advisor that they can actually knock at the door the next day and as Tamas was saying, ask for their money, to see their money if it's still there. So it's really interesting.
And also, I think I'd like to add a little bit to this. I think it also has to do with brands, well-known brands. People are much more in touch with an ABN AMRO or an ING or a BBVA than they have been in their life than, let's say, with the Revolut, right? So I think that this flight to safety is very important right now to keep in mind. And I think that there's a really interesting momentum for companies like us right now to help the banks to get to that level of user experience that the neobanks have previously been able to offer, but can now benefit from the momentum that COVID-19 has presented itself.
I think actually what's interesting here to me, that gap that exists, that I think does exist, what I think is very interesting is that the traditional banks, this is the main avenue for me for spinning out the new challenger banks that are linked to the mothership, right? So how can you generate the right culture for the people that are in there, that come with the idea of being able to work in a rapidly innovating space? They don't need, like, you know, a line of business with 7 or 8 decision makers taking place before a decision can be made. And then when you start making these nimble teams, you then start seeing all these MVPs that larger banks can actually launch to go and test out new customer experiences. So I've got colleagues of mine that work for a very large bank in Spain, and you know, the new challenger side of the bank that they're building, like everybody that works in there, ex Intuit, ex Amazon, ex Google, ex everything, and it runs like a startup, and that allows you to be able to innovate and be able to build a solution rapidly and actually test something out, but know that at the same time you're going to be able to leverage, when the right time is, the user base, right? Which is what allows the fintech to scale, and in many cases is what is causing a lot of fintechs to not be able to break through if they don't have that large enough user base to scale. And I think that, to me, is that moment between the expectation of the customer and the customer experience that people are wanting, but for incumbent banks to get there, I think you can get there faster doing that. And I also see one of the big things here as well in the questions is how quickly a bank's going to become technology companies. And to me, the faster the actual bank shifts gears into becoming a technology company, the faster that this, you know, the consumer's expectations will be met in that side. So one of the banks I've been working with here in the US, I mean, I've seen them build a UX team, a dedicated in-house UX team with designers, with developers, with everything, like maybe 100 people within a year or two, right? I mean, it's sort of become a small software house. And that, you know, 10 years ago, it didn't exist. A vendor would come in, this is a black box solution, plug, play, go. And that's changing. And that's changing because the demand from the consumer is, we need something that is aligned with your brand, and the bank is becoming a technology. It's becoming a technology company with all of the red tape that is involved in being a bank, right?
Yeah. But that's also kind of my last question, because we're almost nearing a time point. But one of the questions that I would like to challenge you guys is, because I agree with you. I've seen great examples of digital innovation and you know, and agile innovation, agile teams becoming something more present in the traditional banks. But in my opinion, there are still lots of traditional banks that are super lacking behind, that are designed to be not innovative, that are designed to be, you know, giant structures that are kind of opposed against innovation. So my question is, will this really happen? Will financial institutions finally become data-driven using analytics, automation, and AI? Because there's still so much banks out there that are really lacking behind.
I think so. I think if they start with the vendor management as it was addressed, if you create a vendor innovation management where you decide for a small innovation for a small lab, or maybe a bigger innovation with a challenger project, and if you have a smart collaboration project where you know which fintech to collaborate with in which area, you will certainly start to become more data-driven using analytics and automation. But there's kind of a hidden elephant in the room subject that we hardly speak about, which is actually the HR human factor in the actual bank. You can't become a fintech on the next day. You can't become somebody that knows a lot about Google and Amazon with all that knowledge, IT technology. Just bringing from the bank's internal HR, as was mentioned by Tomas and Caesar, you actually need to change the psychology of the bank, but you also need to try to start to capture not only good partnerships, but also internally in the bank. You need to start change a little bit the teams and the people and the mentality to actually also look data-driven, analytic, and automation-based. I don't know about your experience, but I get a lot of people that are afraid to move away, for example, from FTP servers and files. Their life is about a file being dropped in an FTP server, and then we talk APIs and real-time instant data messaging exchange. They get scared, and that's the type of hurdle that it's below your sentence. It's there.
Yeah, but I think, like, I'm working with some of the biggest banks in Europe, and I have really seen where they become, like Caesar just told you, that they are forming agile organizations that are starting, because you need that foundation. You also need a technical foundation to actually have a build, measure, learn loop. And then you need to actually be able to see like what the features we actually released, what happened, what was the impact, did we make conversion better, did people actually save better? And I think like they need to take that steps, and if they're not willing to change the way they work and change the way they deploy software, they will not become that. But I think if you have that, if you want to be in the race and you have that fighting spirit, I think you can really do that. And I think like collaborating with us platforms that have this more agile way of working, we can influence them and do it together. And I think that is super important. Then automation, I think like the incumbent banks that come from a place where you hand in a paper and and you look at the neobanks that needed to create the completely digital experience to make it automated, like the incumbent banks need to move in that direction. And I think that some are really good at it. I think like BBVA in Spain, I think they've shown a super great interest with like how they can do a lot of digital journeys, but also like that is a step that the banks need to do. They need to make all the processes automated to make them digital. I think that's.
I think I have a very simple view on this, but maybe because I work in sales, I don't know. But if the answer or if the question is that will banks finally become data-driven using analytics, automation, and these technologies, I think the answer is yes. They pretty much don't have a choice, but they will do it themselves purely for one reason, because it will make them more money. Whether it's to optimization of costs, whether it's leveraging customers more, or monetizing customers more. In the end, yes, there will be improvements in customer experience and for the lives of customers in terms of financial life. But the very simple reason is, yes, they will make more money. Banks like doing that, so therefore they will change.
Okay, very interesting. Actually, because we're reaching the time, guys, I think it was an excellent discussion. I would like to ask each of you, just shortly, to give me your key takeaway from today's discussion. What did you find most interesting? Will the banking of tomorrow be invisible? Is there enough trust? Are banks actually ready to embrace this? Give me your final take. You can start, Bruno.
Well, I think the bank of tomorrow will surely become more invisible, and it will be again highly data-driven and highly personalized. That's clear. They have to follow what the big techs already did, and I think the big technology companies will kind of side pressure them to do so. So I'm really excited to see what's coming up. And also, I'm excited to see how regulation plays a role in all this, because as we discussed today, and I think that's one of the biggest takeaways, is that regulation can actually help you do that leap instead of being something that you always see as a stopper. They can actually help you in shaping the way you see the future to create that trust with your customers and actually make a safer journey yourself as a bank and a more pleasant journey for your customers.
Christian?
Yeah, so I think it's super interesting discussion today. I think that we all more or less agree with each other, and that it will be us together with the banks that will form this future. And let's see how invisible it will be. That's to come, right? So yeah, really super interesting discussion.
Yeah, Caesar?
Yeah, I think my key takeaway from everything we've been discussing today is, again, is this going to happen? Yes, it is. How can banks make sure that they are the ones that remain relevant in the future? To me, it's about being able to accelerate that innovation cycle as fast as possible. And as most of us here at the table are here, we're here delivering technology and solutions so that banks can make that happen. And if they make that happen, they will be the ones that will be at the front of the herd. And the ones that cannot make those investments or those changes fast enough will be the ones, in my view, that won't be able to take advantage of the big change that's going to take place. And I think I'll add too, and we didn't discuss it today, the only other thing as well, I'm very interested to see too in banks, how banks are going to be using all of this technology in the new macroeconomic climate and change that's going to take place over the next 3 or 4 years. I think big changes are coming. I'll be very interested to see how banks design their experiences to be able to deliver value to their customers based on that, right? And that could be a lot of different things, changing inflation, lots of different scenarios are going to take place, but they will affect retail customers and small business owners. We've already seen PPP in the US, like how effectively have banks been able to deliver those loans, and how they've been able to use digital channels to do all those things. Again, as that starts moving, I'll be very interested to see which banks can use all this technology and all this AI and all these platforms to be able to adapt to the next macroeconomic climate in the next 4 to 5 years.
Tamas?
Yes, my final thoughts, Remco, is actually connected to Chris Skinner, who we mentioned on the call. I don't know if you guys seen or the audience seen Chris Skinner. I think we have to mention and commend his karaoke performances on his blog and website, where he sings popular, famous songs and rewrites them to financial services, to ML, AI, all these topics. And if you haven't seen it, you have to see it. It's great. And my point is that if Chris Skinner, as a very respected fintech analyst, guru, and influential speaker, can actually do these playful things that I'm literally in my garden, dressed up in yellow suits and singing a rap song, and then someone recording it on an iPhone. If he can do that, I think the banks would need to be experimenting as well. Don't be afraid. Experiment things. Don't take it too seriously. Don't be afraid to fail. Try few things out, right? Don't bet your life on it. You're not going to your bank. You're risk averse, but be a bit less risk averse. So that's my takeaway. To sort of, I think that would encourage all parties to come to a final solution which is better to customers, or to or a better financial life to customers. I think you need all these elements in place, and of course it's a habitual change or cultural change in the banks as well.
Interesting. Gentlemen, I would like to thank you today for your contribution to this great panel. I think it was a very interesting discussion. My own final key takeaway is that the future of tomorrow is definitely going to be invisible to a certain length. Banks need to be agile, need to be innovative, need to embrace automation and AI, or otherwise they will face lagging behind. And we're going to see a very interesting banking future in the near future. And as vendors, we need to deliver on our promises as well, but I'm sure that we will. So thanks again, guys. It was great.
Thank you.
Thanks,
So
guys.
the audience,
Thank you, Remco.
any questions that we couldn't answer today will be answered in a follow-up, and there will be a recording available on YouTube. Thank you again. Have a great day from Budapest.
Thank you.
Thanks, goodbye.
Bye-bye.
Thank you.
Bye-bye.